I'm Colleen Derrick with Swaggers Insurance. Welcome to Giving and Generosity 2.2. This is so not all gifts are created equal. Whether you're giving shares, funds, land, or collectibles does make a difference, and it also makes a difference who you're giving it to. This session is about giving to community and friends. When we're giving to community and friends, thoughts are, well, do I want to give them either a piece of land or shares, much as when we were talking about family, or a collectible intact? Or do I want to cash that out and give them the gift of money? And again, we have to remember that when we have something and it's grown in value, there is usually a taxable event in Canada. But giving somebody a gift, well, there's not tax on giving a gift. And so people sometimes get that confused. It's like, oh, well, that was taxed on giving that gift. No, you're not taxed on giving the gift. What you are taxed on is when you dispose of, or what we call a deemed disposition. So an event that you didn't actually get rid of that item and cash it out, but you changed the ownership piece in a way that the government says, we need to have the taxes up to date. So we're going to have a deemed or pretend or assumed or what if you got rid of it moment, and then have the taxes brought up to date. And then going forward, it now has that value for anything you do with it after that point. When you're looking at giving to community and friends, you want to be maybe thinking about their commitment and their expertise. So going back to session number 1, where we said, well, why are we giving this to them? What's their commitment to what you're giving? If a community needs a piece of land and you have a piece of land and you're giving them that piece of land, that's wonderful. What's their commitment to that piece of land? And do you care? Is there going to be a control issue for you? Are you going to be able to give that land and then walk away? Would it perhaps be better to sell your land, take the money, just give them some money, let them buy whatever land they want, and that's off of your head? Because giving, we like it to be a good thing for both the person who receives it and the person who gives it. And sometimes there's an emotional entanglement. And Amy has done a fantastic series and session on our emotions and money. So I would refer you to maybe to do some of those courses to just really make sure that you've got a clear emotional palette coming into some of these money decisions. Because really, it's just sad when we end up having somebody give something and then having a bad taste in their mouth or regretting it afterwards. 1.2 said, hey, let's plan our giving to community and friends. This is part of that. The second piece is who taxes who? And again, that's that. Is it a disposition? Is there a deemed disposition? Gifts are free, but again, transfers of ownership, sometimes there's a deemed disposition here. You just need to take a look at that, right? And say, who is there a taxable event going to happen? And who is that? And we're going to talk about taxes in module number 4. So tune into module 4.2 for some questions to ask about that. And then the third question is, again, that control piece. Whatever you're giving, are you going to be able to take your hands off? If you give money to a friend to buy a car and they end up not buying the car and end up buying a trip to Cabo, are you going to be okay with the fact you gave them money to buy a car and they used it for a vacation? If you're not, go back to lesson number 1 and rethink some of that planning on that. When we give with an intent to control, there's some danger in that. And normally we would say, never try to control people with money and never give a gift you're trying to control. However, when you're collaborating with a community event, perhaps some control is appropriate in that. Or not control, but input. And so here I'd say, yes, question control, but absolutely consider input.